Apologies for that. I just ordered myself a nice pineapple pizza. No, I'm just joking. All right, how many people we have here? Welcome everybody who just joined. Right, so this is where we're going to be waiting for. So from in 10 minutes, there's going to be a macro that's going to take out any untaken liquidities. So I think we took everything from the top. We're probably going to take all these liquidities right here. So there's going to be an aggressive move. I want to see the market just go speed, and distance. As ICT likes to say it. All right, while we wait for that, let's go ahead and go over today's trades and learn something important. Today, there's going to be something important we can learn, all of us. All right, boys. So going into the morning session, we have our indicators, LUXALGO price concept, the pack price action concepts, and two of them. One's for longs, one's for shorts. All right. So going to the day, what did we do? We opened in London. As most of you know, are familiar now by our strategy. If you're not, you can just go to Pro Strategies, user strategies, sorry, now it's changed. And it's called sweep of previous session lows. So we have 3 steps. And we're going to learn, for those who are familiar with the concept, we're going to learn a few things new today. So previous sweep of previous session high or low. Step 2, Chosh. Step 3, FEG for entry. It's as simple as that. All right, so in London, what did we do? Price went down. We swept previous session low. Oh, I gotta mute some people, I think. All right. So for those who are familiar with, this is the strategy, but today, like I said, we're gonna go over very important things while we wait for this macro from 1515 to 1545. Whereas we're gonna see live that there's gonna be a really aggressive move to take out some lows. So I think these lows here, some people might draw a trend line on these, but these are essentially low resistance liquidity run, which means if we take one low out, we're probably going to take all these lows consecutively. But while we wait, so like I said, in the morning in London, we swept previous session low. This yellow line here was swept by this candle. That was step one right here. So now we're going to be looking for longs. But before we go into longs, we have to wait for a chosh. This sweep here allows us to know that the market wants to change direction by 25%, but we want to be more sure. All right. So what more conviction can we get? That is the reason there is a chosh. This chosh will tell us that there's another 25% chance that the market wants to reverse. And essentially, if we get an FEG, that will be our final 25% to actually the market reversing. And the last 25% is uncertainty. There's no way that anybody can know for sure. But 75%, I think, it's pretty good conviction to take a trade. So step 1, we swept it right there. Step 2, we wait for a chosh. So for a bullish chosh. So we go ahead and turn our bullish choshes on. One's for shorts, one's for long, respectively. So right here, we got a chosh right there. All right. So that was step 2. Now step 3, do we have any FVGs? Yes, we do. Right there. So this trade was pretty simple, very easy to take, very easy to learn, very easy to take. But after this trade, we're going to go on to this trade here, which gets a bit more complicated and requires some manual work. But this manual, of course, you can't just put a limit order and let it go. But I want you guys to learn how to be sniper, like to the tick, or to even like very, very sniper entry, to limit your risk and increase exponentially your profits. But before we get into that, let's go back here. So on LUXALGO, during your daily trading time, LUXALGO will draw you FEG right here. So now if I just remove this, for those who are not familiar and would like to buy the price action concepts indicator, if you click on this, if I go back into replay, you can see that LUXALGO drawn us an FEG right there. Can you see? It draws it for you automatically. So it draws the chosh for you, which is one of the hardest things to find manually, and it draws the FEG. Some of you are not familiar with the concept, but it does it for you. All right. So fair value gap. Other people call it imbalance. Other people like ICT call it SIBI. Sorry, BISI. So buy side imbalance, sell side insufficiency, which means there's a lot of buyers, but no one's selling. Essentially, there is sellers in there, but it's just a glitch in the matrix, if you want to call it. So essentially, it's about imbalance or FVG, fair value gap. So as the name implies, self-explanatory, it's fair value gap. This gap offers fair value, so the market or the algorithms want to buy in a place where it's fair to them. So this would be the best place to trade. All right. So that was step 3. We have FVG and CHOSH. Now, let me get out replay because I really don't like it. Come back here. All right. So since it's been mitigated, I'm going to draw it manually to save memory. The algorithm, the concept, the indicator will delete them, or once they get filled, right there, they got filled there. But anyway, during your time of trade, you're going to see this FVG. You're simply going to put your entry right there, stop loss at the low, and aim essentially for previous session high. It's as simple as that. That offers you essentially 186 ticks. Unfortunately, since I mentioned it in the morning, the bias daily the daily bias is pretty bearish, so I wouldn't expect these highs to be taken, even though I really want to take them. It just didn't do it overnight. It did it in the morning open, in which we took a trade there. But I essentially closed my trade at 2RR. As soon as I get to 2RR, I put my stop loss at break even. I close most of my contracts and I let it run, and then you can trail your stop loss up, 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 up. So now everybody is familiar with this concept. Now I do teach that. I can hear humming. All right, that's the basic way of taking this trade. It's as simple as that. You just plug and play and done. But now, if you want to be more, if you want to be a bit more, like if you want to use more skills and to like enter heavy size, I wouldn't enter 5 contracts here. What I would do is, once we get into this FVG, I would enter, like for example, 1 contract, 2 contracts. Price touches it there. It goes up. It forms another fair value gap right there. This is pyramiding, guys, for those who don't know. Price goes up, it goes down. The price, I would have entered another position right there. Unfortunately, we didn't get this entry right there. The price just moved up. I wasn't filled on my second entry. This is how you pyramid. And price went up, and it just never gave me another opportunity. The last opportunity it gave me was this fair value gap here. I would have entered there. However, I would not enter there. Why? The reason is if I take from this low to this high, any point above this area is this is discount, this is premium above the 50%. I can only pyramid. I want you to all of you, if you want to add to your position, you never add. If you're long in, you never add in the premium. So as soon as the price leaves this discount area, there, even if you get an opportunity to add, you do not add. This was the last time you could add to your position. If you entered here, you would have added here, but the price never came back to it. So this is really important. Even if you don't use this strategy, this is really important. After if you're in premium, you never add to your position, okay? Because then it's gonna be the price is, if you retraces a little bit, you're gonna be either in you're gonna be either what is it saying? Eviscerated or evaporated, like your position. Even your profits will be evaporated, all right? So keeping that in mind, now we're gonna go into an example where we will. But just give me a second. So this trade was pretty straightforward. There's no Fibonacci, there's no 50, there's discount zones. The reason is, remember I told you guys, there's someone. One second, guys. There's a lot of humming sound coming back. All right. So that was pretty much forward. So remember, I always tell you guys, take the Fibonacci from the low till the swing high after the CHOSH. The CHOSH was on this candle. So where's this next swing high? Right here on this red candle right there. And move it around. Scroll over. All right. So remember, I always tell you guys, enter an FVGs below the 50%. Now, most of you ask me like, hey, Luke, how do you know which FVG to use? How do you know which order block to take? How do you know which blah, blah, blah to take? And like, it's because I know the narrative. There is a narrative, there's a context that I use it with. If FVGs below the 50%, if I'm long in, I want to enter that FVGs below the 50%. We're going to get into that better example right there. I would expect the FVGs in the premium above the 50% to be disrespected, and I want the ones inside below the 50% to be respected. All right. So now, here in this example, we have one FVG. So if you have one FVG, you do not have to use You do not have to wait for the price to go below 50%. It doesn't have to go below the 50%. If it's only one FVG. If there's multiple, you must. All right. The algorithm clearly is very sensitive to this idea. So here we only have one FVG. So essentially, you can enter anywhere at it, either at the start of it, either at the 50% of it, which is called the consequent encroachment, or anywhere inside of it. It doesn't matter. Okay. Here we have an order block. If you add your order block to that, you can see an order block right there. Now the price went up, and that trade was done. All right. So now what happened? Now London closed. After London closed, it closed on this candle. New York AM session opened. For those who are not familiar, New York AM session, we have several sessions on. Asia, London, AM, New York AM, and New York PM. And yeah, so it opened here. Now we have no trade. Now we have to wait for a sweep of the high of the previous session, which now in turn became London, no longer Asia, either the high or the low of it. So a few minutes later, exactly 5-10 minutes later, we just swept again the previous session low. So London low, we swept London low right here with this candle. A wick is enough. We have a nice wick down. And I can show you guys exactly where this went down if you want to turtle soup it. But just sticking to that strategy. Now here where I want everybody to focus, because this is where it gets where most of the knowledge, and it's where you're supposed to take notes. So step one, we just swept previous session low. Nice. Now we're looking for long. Step two, Chosh. We have to wait for Chosh. So we'll go ahead and turn our LUXALGO price action concepts, put it on, and we wait for Chosh. So approximately 20-25 minutes later, we got a Chosh on this candle right there, right? Very nice, aggressive candle. And that was step two. Step three, do we have any FVGs? Yes. LUXALGO drawn 3 FVGs for us. One right here, another one right here, and there's another one still open. Forget this one over here, right? We're still on this side of the chart. All right, so after we got the Chosh, we have 3 FVGs, right? 1, 2, 3. So you'll be like, Luke, which one do I take? If I enter here, by just visualizing, if I always tell you guys, enter at the first FVG, because the price may, if you try to enter here, the price, you might get a better fill, might get a better risk to reward, but at the expense of losing a trade. The price might just touch this FVG and then moon up, right? So let me just go ahead and turn this off, just so it doesn't confuse. Oh, I have to. This FVG is gonna, forget this FVG right now. We're still here. The price never came back to this area, okay? So we have 3 FVGs. Which one do we take? Simple, guys, simple. Just take your Fibonacci, put it at the swing low. The candle after after you see the Chosh, the first swing high after the Chosh. This Chosh candle formed the swing high itself. Look. High, low, low. This is a swing high. That's enough. That's how do you always ask which high or low do I use? That's the very first swing high after the Chosh. Even if that's the Chosh candle itself, as in this case. So you take your Fibonacci, put it from low to high, and now what do you do? Now we have premium 50%. Anything above the 50% is premium. Anything below the 50%. So I really want to turn this off. So I'm going to turn it off just for sake of understanding. Or I can go to replay. This is where replay comes into handy. All right, you guys should be able to understand this much better now. Right. So 1 second. Let's give it a punch. All right. Now we can find the FVG. I can remove everything. We have 3 FVGs, right? I said take your Fibonacci from the low, put it to the high, and just extend it to the right. All right. Now we have 1, 2, 3 FVGs. 50%. Anything. If you want to buy a car, you would buy in discount. If you want to buy in Black Friday, why do we wait for Black Friday? Because we get discount. So if you're buying something, it's best to buy in discount. You never buy something when it's premium and sell it when it's discount. On the other hand, if you want to sell something, you want to sell it in the premium, in expensive prices, and you want to buy it in cheap, right? Or sell it as such. So this is the 50%. Here is the premium, shaded orange. Here's the gray color, shaded. Sorry, this is the shaded color. Gray is the discount. So the price goes up. Now, which FVGs do we use? We have 1, 2, 3. anything below the 50% is an FAG I can take an entry on, and I would like to see be respected. Any FAGs above the 50%, I don't care if they get disrespected. I don't care if the price goes through them. It doesn't matter for me. Some people like price just went below this FAG. Oh, now we turn in bench. We just broke a very important high time frame, 5 minute time frame FAG. We should be looking for shorts. That's not correct, guys. This is premium, right? The algorithm doesn't take into account this. So the price, where would I enter? You can simply put your entry exactly at this FAG right here at the start of it. Put stop loss below. There's 3 FAGs, so your stop loss can be either at the low or at the nearest place below the last FAG. So you can take into account all the FAGs. And of course, target the previous session high, right? This would essentially give us 1.93. So essentially it's 2RR. We would take the trade. All right, that's area 1 you can enter and just leave the chart. It's fine. You can do that. You can put a limit order in here and just leave the chart, right? Because if it goes against you, that was a really nice educated guess. Not guess, like it was not a gamble. It was nice. You have everything in your favor and it goes against you, no problem. You wouldn't worry about it. Another place you can enter is the 50% of this fair value gap, right? This LUXALGO beautifully draws the mid 50% of this fair value gap. Price is very, 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 I cannot stress how much price is sensitive to the 50% of the FVG. It's very sensitive, right? It's one of the signatures for the algo. It's very sensitive. So if you can put your entry there, and now you would have got even better feel. Now you almost got 3RR, which is great. But remember, the price might just touch this FVG and just moon and never see the light of day again. So you would be doing better risk at the expense of missing out the trade. But in this case, I want this because my stop would be too big from here to here, right? So that's second step you can enter. Third step is, of course, you can put it at this FVG, but that would really decrease your chance of getting filled in. Price might just come here and moon off once again, but that would be the best because your stop loss would essentially be nothing. It's going to give you 5RR. Beautiful, right? Then you can put it back at the low as well for 4RR. But there's one more very, very nice entry, and it's called the optimal trading entry, right? So how do we do this? Exactly, let's remove the Fibonacci. We take our Fibonacci once again from the low, if we long in, to the swing high after the short, which is this. Again, extend that out. Now, I will share the settings with you guys. We click OTE, go into settings. These are settings, you can screenshot it. But what I mean by OTE is 0.62 and 0.79. I don't care about golden ratio. I don't care about anything. Algorithm, this is one of the entries for the algorithm itself. 0.62, 0.79. Some people, ICT occasionally put 0.70 in there as well. But this essentially is any place between these two zones is an excellent place to enter. It cannot get better. All right. So where would this be? You can see 0.62 to 0.72. If I just put it on the right side, so you can guys see it. All right, yeah, 0.62, 0.79. This is the optimal trading entry, or in other words, sweet spot. This is the sweet spot of ICT. He loves this. You put your entry. You just put if I just put a rectangle here, this is the zone you should be entered. Anywhere inside this zone would be best. Notice we have an FVG inside as well. So anywhere inside this FVG is good, and anywhere inside this sweet zone is very good to enter. And you're gonna see that the price will respect this so good. The price comes back right to it, right there. And notice how it just closes, it just touches it to the millimeter, I guess. Look, you guys see. To the tick. It fills it in. And 1 second. Yeah, so that would anywhere here would be good to enter. This would be the best. Anywhere in here is great. You're in the best area. So you enter here and then put your stop loss. Anyway, I'm not even choose, just gonna stay here for the sake of those who would benefit of the doubt. Take into account and put at the previous session high. This would essentially give you 200 ticks, guys, risking only 69 ticks, 3RR, and boom, just like that, we just let it run and see what happens. Market goes up, forms another fair value gap here, respects it, goes up, and essentially it will dip again once more, if I remember right. Yep. And boom. Hit our maximum target right there. And much, much, much more. Where does it go, guys? Where does it go? It goes at least one standard deviation is where I would probably exit a trade. Let's see if it goes there. So basically 1 times this rate, this area here is, if you put it above it, if you draw this rectangle here, it's 1 standard deviation, just 1 times the area. And as you can see, it touched it to the tick, guys, to the tick. Look at the, I don't care the wicks, look at the candle bodies. And from here it reversed. So that essentially would have gave you guys 433 ticks. If I'm not good with math, but 100 ticks is $500. 400 ticks is $2K, $2,000, $2,000, guys, with 1 contract, guys. I don't even tell you guys how to add to your position yet. Pyramid. Imagine you go in with 2 or 3 contracts. That's just passing your account in a single trade. All right. So now this is where we are right now. I hope that was insightful. Now let's see what happened in art. I remember guys, at the start of this session, I told you something happens between 15:15 and 15:25. Sorry, 15:45. So it's a macro. There's many macros. I can write them all for you. But the last one for the PM session is 15:15, 15:45. And between this 30-minute time period, the algorithm would like to hunt with aggressive movement, take out any liquidity that we didn't take yet. So which liquidity we didn't take yet? We didn't take these. So let me just remove these. Any low or any high, any equal lows or any equal highs. So now we roughly 10 minutes into this algo, into this macro, we will see what it's going to do. It's going down. It's probably going to take any of these. This, or this. If it takes out this or this, most likely you're going to take out all these. But it can take out also these 2 equal highs for those short selling. It goes up, take it out, and then continue going down. We don't have a setup here yet right now because we didn't sweep the previous session high. We did get a chosh right there. Oops. We did get a chosh there. We got an fair value gap. Where is it? Right there. But we don't have a sweep. So we just watch. You can guys just tape read, guys. Just tape read. If you guys have questions, you can write in the chat while I smoke my shisha. And while we wait, to just show you guys that roughly in 10 minutes, 10, 15 minutes, there's going to be a move, aggressive move, that's going to take out a low or a high. And that's going to just run, the rest will be run to the market close. God damn, that's a lot of people. You guys can chat here. How did you know, fam? Sorry, guys, man. Everybody decides to call right now. Best team. Oh my god, sorry guys. Okay, so now we just wait. Let's wait. Well, let's check if there's any other asset that goes by. So let's check out CL. All right, in CL, we had also beautiful shorts here. We have swept of previous session high. We got Chosh, we got an FEG there. We didn't tap into it. I took this short. I made roughly 900 on this trade, but that was pure luck. I was waiting for an entry of this FEG. But the price never came back to it, but I just saw a resist, some kind of this high. We tried to get it. We tried to come back to it. We didn't take it. We failed to do so. We came back. We tried to fail again. Right there, we tried to fail again. And then we tried to fail again. So I wanted to enter at the next FEG. Where's the next FEG? We got an FEG right there. I entered at it. And because of news, I don't know why, but it was immediately delivered almost 100 ticks, which is On crude oil, it's one tick is $10, so that would have been $1K, $1,000. I can show you guys the executions if you guys like. But now what happened here? Now in New York AM, we saw previous session low. Now we're looking for longs. We wait for Chosh. Step 2, Chosh. We got Chosh right there. Beautiful. Step 3, we got FEG. We got an FEG right there. Unfortunately, the price never came back to the FEG to our entry, and it eventually just reached our maximum target. But I remember some of you took shorts today on CL. We just swept previous session high, which is that London high. We got a Chosh there. It's intertwining between New York 8 p.m. and New York AM, but it's just one candle, so it's fine. We have an FEG there. People entered it. I know many people on the channel entered this trade, and they all made a lot of good money. Again, $520. So let's go back to. Thank you. If you guys want me to go over any asset, you can tell me. We can check bias, daily bias, blah blah blah. Jaycon, my indicator is on. The settings are here, guys. I'll send the settings for you guys here. 1 second. You go to sweep LUXALGO price action concepts, and in here you would 1 second. Go to pin messages, and there's a link here. 1 second. Where's this chat? You guys can copy the settings here, but you have to have premium. Yeah, Rainer mit I. I send a setup for CL. How do you behave exactly between? I would not trust it as much as you saw. I would take this position because my stop loss would be pretty much. We entered. Where did we enter? We entered. We entered right there. So my stop loss is essentially 24 ticks, which is not bad. I allow myself $300 to risk, but I wouldn't go in my full position. I would probably go like maybe a micro or like one single contract, very low size, light size here, and it delivered very nice. Do you use your sweep strategy on any forex pair? Yeah, this works on forex as well, guys. This is forex. It works on a forex. If you guys tell me any, let's go on Euro USD. Wow, this looks disgusting. Oh, I think I'm on the futures, that's why. But anyway, we sweep previous session low. We wait for step 2 Chosh. We got Chosh right there. Step 3 FEG. We got an FEG right there. We enter at the FEG. Put stop loss at any low below all the FEGs, like here, or a swing low. And target previous session high. And there you go, guys. Likewise here. Sweep, Chosh, we enter here. Sweep. London, we swept previous session London here. I don't know why the cans are weird. We got Chosh, FEG, and then we target previous session high, which is London. I think because I'm on futures. Let's go ahead. Yeah, but that's pretty much answers you. SPY. Never mind, G. It's getting burned because I'm speaking and not writing. Are you making session with these boxes? No, these sessions are coded by LuxAlgo. The settings are also I sent in the group chat. These are the settings. But yeah, it's special settings. It's not the right times of. It's not your per se the settings of the sessions that you normally know. Like New York AM session opens at 9:30. Our one is at 8 a.m. You get what I mean? These are special timings told by ICT based on the IPDA, which is the interbank delivery algorithm. It's the algorithm he talks about. If we enter now and say what is the target, you can't enter now. It's too far from your stop loss. Plus, it's not It's a semi-valid trade. Your stop loss would be huge. You wouldn't enter that. That would be crazy. But right now, we're just waiting for the 10 more minutes, guys. 10 more minutes, and I'm going to see aggressive move within that 10 minutes. We have 10 minutes to make a move to take out liquidity. Once we take it, we can say where the market wants to go in the last 15 minutes or so. So there's several macros. I think LUXALGO has macros. Micro. LUXALGO. Yeah, there's ICT macros. This is very important. Not very important. Very, very, very strong indicator, guys. Macros are times like 10, just at the start of every hour. So 10, like 10:50, 11:10, 11:50, 12:10, 12:50, 1:10, stuff like that. It's a time where the market will just speed up, grab any liquidity you can. So the last one we have right now is the 15:15. So let's see what happens in the last 5 minutes. You will see a speedy move to take out either a high and then continue low. If we take out this high, we can look a short to take all these liquidities. BTC USDT, sure. JK Khan, I'll write that. I'll write them for you. There's 11:50, 12:10. There's 9:50, 10:10. There is 7:50, 8:10, and there's 8:50, 10:10. Like I said, just 10 minutes before and 10 minutes after the hour starts. Oh, what the hell did I just do? BTC, nice. We just swept previous session high. So we're looking for shorts. Now we wait for a chosh. This chosh is not valid because we didn't sweep the high yet. We swept it in this candle. So just extend a line from here to here. We swept with this candle. So once we get a chosh, a bearish chosh here, right, nice, strong, aggressive displacement with a fair value gap, we would enter the fair value gap and essentially target lows. So we can target this low, essentially the previous session low, which is New York AM. But let's have a look if we had a long on today, London. So on BTC, we swept previous session low, which is the Asia. We swept it there. Now we wait for a chosh. We got chosh a few minutes later with a big, nice candle, fair value gap. You would have single fair value gap. You would have entered here on this candle, put stop loss at the low, and target previous session high, which is Asia high. And that's almost 4 RR, and boom, guys, it delivered even much more. This is 1%, guys. So for those who do use leverage, like 20 times leverage, that would be 20%. If you use 100 times leverage, that would be 100%. Some people use 500, some people use 200 on MXC. So you guys do the math. You guys are more familiar with me. I don't like crypto, but as you can see, it was beautifully delivered. Now, what about shorts? Today in the morning, Asia, we set previous session high, the new PM. We got an chosh, very nice. We got a very, very small FVG right there. Don't worry, guys. LuxAlgo will draw it for you, but I'm doing it manually because it's been mitigated. Come on. Just like that. You would have entered here. Put stop loss at the high. Or you can essentially put it at the swing high too. But I would give it more room for crypto. And I would target 2RR. So I'll close most of my position at 2RR and essentially leave some runners for previous session. I wanted to see SPY. Did my internet just disconnect? Can you guys hear me? So SPY, let's have a look at SPY first. I don't know if it's this one, but previous session low swept, got Chosh, fair value gap, we entered the fair value gap. Notice this, guys. Look at this candle, almost at the 50% of this count of the fair value gap. And then you would have a run, but this would be very risky because your stop loss would be very far away. Let's try SPX for those who trade stocks. Pretty much the same thing. This SPX and SPY move similarly. But here we swept previous session high. Step to Chosh, we got Chosh there. FVG, we entered the FVG right there. And target previous session low, which is there. Which is 9 pips or 0.20% or 920. I don't know how you guys calculate this SPX, but yeah. Again, price goes back here and then you go out, target previous session high, which is there. And you can earn a bit more. So we have 4 minutes left until the market does something. Otherwise, it just won't. So we can see it going up. So I think we're going to take this high. There will be an influx of really strong move. Notice here, guys, this green line, the 50% of the fair value gap. Look how price respecting it to the tick. We use that as support. The price is very sensitive to that. Price goes here. So this would be our buy side. Price goes respected here, it goes up and then goes down. And then we use it again as support. Price goes up. This is an order block because we have FVG. Any candle that, any red candle that forms a move like this with a fair value gap is an order block. You can see how it's respecting it to the tick. We shouldn't see the price going below, closing below the 50% of this order block. It held it there. It can wick down a little bit. It's fine, but it shouldn't close. So most like I said, we have 2 minutes left. We're most likely gonna take out, like I said, a liquidity, a high or a low. So probably we're gonna take out this high and then probably go down. If we take out this high, we probably can continue there, or we can just reverse. So 1.5 minutes left. You can guys ask questions. Drop for a sec. What is this kind of strategy called? It's in here, guys. We call it the one setup for life because we never change the setup. No matter what market condition we are, bearish, bullish, consolidation, we don't care. It's one setup for life. You will never change it. Like I haven't changed it for a year and I don't plan to change it ever. To be honest, pack order blocks are delayed. That loss of blocks shouldn't be delayed has been mitigated. I mean, this is how you can draw. For example, guys, here. For instance, we got Chosh here, right? So you're looking for a long, planning to a long for this fair value gap. You enter here, for example. This red candle here is an order block. Why is it an order block? Because it's the last red candle before a move up, and this move up must have a fair value gap. If it has a fair value gap, this red candle becomes automatically an order block. So we shouldn't expect the price to go below close below the 50% of it. You can see it touched it to the stick. Price is very sensitive to the 50% of the FVGs, which we call consequent encroachment, or CC. If it's an order block, we call it mean threshold. In other words, just 50%, just fancy words for the fancy people. We can see that price touched it to the tick right there and then blasted off. Now, consequent, just like that, price went up, pumped again. We have another fair value gap here, another imbalance right there. I'm not drawing out, but it's right there. So this means the last down candle, this candle here, is an order block. This is an order block as well. LUXALGO will draw it for you. But here, look, this is something you guys should know. This order block, if the price goes up and goes down with the red candle, if it touches with the red candle, or this red wick, you can see it. Once it touches this order block, this red candle here, this wick, becomes propulsion block, propulsion order block. As the name implies, self-explanatory, it propels the market. So as you can see, we shouldn't close below this wick here. Price should pump us very hard. So you can see the market just pumps right there. Don't underestimate it. This is, once it closes, this is essentially 300 ticks, guys. So $1,500 with just one trade. So if you missed out your entry there, you could have entered right there and expect the market to never come back to it until the objective is taken. What's the objective? These high right there. You can see the market went right to these highs before it dropped. And I call this. This is called turtle soup. I can go over it in a second. But as you can see, guys, I told you guys in the last from 15 to 15.45, there you go. You see? We took out the high. I told you guys, look, we just delayed 1 minute, but we just tapped it. It's just the algorithm, guys. It happens every day. It's not coincidence. It happens every single day. I consider jokes as medication for a lot of people don't. And if wakes of the medication. Basically, if the price goes down, for example, this bullish or fair value gap, once it touches the end of it, this becomes a repriced order block. We don't call it mitigated. There's no such thing as mitigated. There's repricing, there's rebalancing, and there is reclaiming. So this fair value gap, it came up, it went down, it repriced it right there. Look at the tick, look at the close of the body right there. Closed right at the tick and went up. Once it goes up, it's now rebalanced. If the price comes back to it and bounce again from it, it becomes reclaimed, just like the order block. So here we have an order block. Price, no, this is not an order block. This one, price went up, went down. So this is an order block. It came back, it touched it. Now it is called a reclaimed order block. Notice again, this fair value, this order block here. Why is it an order block? How do you know which order block to use? Because there's context. This fair value gap. So this is an order block. We are bullish over order flow because we have a chosh, and we swept previous blah blah blah. We swept these lows as well. So once the price comes back to it, sorry, I was trying to explain this. This fair value gap, look at the tip of it. Once it touches it with this red wick, this becomes a propulsion order block. This here is a propulsion order block, and the price, look, we just took out. We would aim for the next area of liquidity. Where is the best area of liquidity? These highs here, right? These highs right there. Equal highs are areas of buy side liquidity. Now, I wouldn't expect the price to come back. If I take the Fibonacci, this is the 50% of this order block. Again, look how the price is respecting that. I don't want to close below this 50%. If you close below this 50%, then I would be sure that the price might go back to this low, and this low. And essentially, this would be a low resistance liquidity run because the order flow here is bearish. So we'd expect low resistance once we get to this. So if we take this one, we probably take this one out. Right now, the order flow is bearish. That's why you see us very struggling to take out this high, even though it's so close. I wish I recorded this again. I hope someone's recording. What are the hour of the sessions? Like I said, friend, refer back to this. Here is the hours. Click copy and it will save the settings of all indicators automatically. Good question. Can you show settings? Sure, brother. These are the settings. New York AM from AM to 13. 0. I mean, you can just memorize it like this. 0, 0 to 8, 8 to 13, 13 to 19, 19 to 00. This is the best times where the IPDA gets into effect. And there you go. See, guys, there's a move right there. Where did I say if we take out this high, where do we go? We go back to here. So essentially, we have the chosh there. We have our entry there. And notice here, guys. Let me close the thing. We rebalance this fair value. We tapped into this one. And now we probably go down. Told you guys. I told you. This is not a hindsight, guys. I'm telling you guys live what the market is gonna do. Not because I know, but it's if I'm the algo, this is how it will work. If this session didn't open, I would have took an entry there. See, we have our move. Look at the candles. These are all green candles. There's no red candles, guys. Look at these candles here. There's no red candle. There's no green candles here. Look at these green candles. No red candles here. This is all algorithmic, guys. It's not human. It's not humans doing that. Notice now this 50% of this line. of this order block. Sorry, of this fair value gap. 50% right there. Can't see it. It's right there. Watch how price respect that. The only thing that's not repriced yet is this fair value gap and this fair value gap. But we won't do it right now. We probably can't go back all the way up there. We could. We really could. We still have 8 minutes. But see, guys, you could have entered on this fair value gap. You can enter anytime. Like, it's never late. You just have to know where the draw on liquidity is. So long this 50% of this order block is respected, we are bullish. Pay attention here. Pay attention to this line, which is the 50% of this fair value gap. If you want to go higher, we shouldn't hesitate. We should pump higher. We should have speed. If we respect it and like struggle to go above it or stay around it, we're probably going to go down. Hope you guys are learning something. You see how it's struggling to go above it? See how sensitive price is to this line? Now, if I to take Fibonacci from this low to this high over there, scroll over, we're now back into premium. Premium, fair value gap, very nice entry. But it's just too late to go into trade now. We've only got 6 minutes left. But let's see what the market does. See how we hesitated a lot of there and went down? It just shows that the market is respecting this. Shisha with the boys. Let's see what it does. Again, it touched it again, it went down. if I want to see it go above, I want it to go in the next 1 or 2 minutes. It has to pump or go down. 5 seconds till this candle close. And you guys, this is price fractals. You can go in the 1 minute. You can go in the 1 minute. It's exactly the same thing. Decisions. We just swept buy side. We have this low here. If we break below it, we probably form a change of character. If there's a fair value of displacement, we enter it and control. Look how price is respecting that. For example, guys, this candle here is red. The next candle here doesn't have a fair value gap. It has the fair value gap right there. So this is an order block. This is on the 1 minute, guys. Price went up, comes back in, fills more orders, and goes up. This red candle touches this red candle here. So this is a proportion order block. Boom. Price just propels. Never sees the light of day again. Now, what I want to say is, this order block, when would it be disrespected? Not when it goes below it. That's not accurate. Once the price closes below the 50% of this, the mid-mean threshold of this order block, you see, price respected. Look at almost one tick away. It can't always touch it and just bump up. Then everybody would know about it and everybody would put it in books, blah, blah, blah. They try to make it a little bit hidden by just bringing the price a little bit down. So when people try to like tape trade, they wouldn't understand what's going on. So if we close below this, then this order block would be invalidated and we'll probably see this low taken out as sell side. Price comes back to it. Boom. Now this becomes an order block. This order block. Why is it? Because it has a fair value gap. So this is an order block. The lowest red candle is called order block. And there's a FVG. Price comes back. Where do you think it came back to, guys? Where do you think it came back to? Take the high. Take the low. Extend it. Again, to the 50%. And since it's a propulsion order block, boom, guys, boom. Let's go back to the 1 minute. Sorry, to the 5 minute. Thanks, Luke. Learning a lot. So this strategy work the same for BTC Ether. Yeah, it works everything. It works on everything, bro. Everything. On crypto, it's a bit. Your stop loss might get wicked up because there's some 12 years old with billions of dollars that can just move the market. But essentially, it will go wherever it wants to go. You're welcome, Sinopio. You're welcome, Davis. And you guys, in the next 1 or 2 minutes, I want the market to go aggressively above this point here, and it did. You see? Now it went back to this point. It filled it. We have only these two before the market can essentially go down. Doesn't have to go all the way back there. There's this high there. We might want to take it. Because who's right now most profit, guys? People are shorting from here. So how can we use how can we cause the maximum damage, maximum pain? If you're the market maker, not market maker, if you wanted the algo, how would you cause the maximum pain? By taking these people out. This fair value gap, this high, we take it, we're probably gonna repel down. Notice, guys, proportional order block, proportional order block, boom. You didn't know that? You have this fair value gap. Chosh, up, down, fair value gap, respected the 50%. I didn't go below the 50% of that, didn't close below the 50% of the order block, and boom. Look how many FVGs we're forming. This is not human, guys. This is not human. Look, now we're back up to this fair value gap. There's this high there. I want to see it take this high out. This is also buy side. But it might not do it today, but we see. There's this small fair value up right there, which price rejected from. But I told you guys, in the next few minutes, if we reject from this 50%, we're going to go down. If we hold, I want to see really strong displacement up. Really move, aggressive move. Distance and speed. Let's drink some Fanta. Today is so funny. We didn't have any single volume imbalance. It's something I wanted to show today, but we didn't get any. Let's see if there's one on the 1 minute. Yeah, there isn't any. Well, am I gonna mute someone? ES is not doing shit. As a matter of fact, it's still in discount. Yeah. ES. So if I open both charts up, remove everything. NQ took its high. Oops. Where ES still didn't. So this is SMT, guys. Which means it's smart money tool, which is kind of a divergence between two assets. This is not RSI, guys. This is divergence between two assets, which is very strong. Actually, hold on. ES. Yeah, no, there's no ES. Let's go on to 5 minute. There's no SMT right now, guys. So yeah, let's close back. Let's go back to one chart. Back to NQ. Market's gonna close. I want to see my comment on the live. Which comment? So, guys, you saw live that you can call stuff out, and that's not important, guys. It's not about calling. It's not important to call where it's gonna, what like it. Look, I told you, blah blah blah. It's important to know what's going on. Tape reading. Do this every day. You're gonna see the same exact results. For example, now we gave a lot of examples for the bullish. Let's have a look at the bearish order block. Green candle, up candle. Does it leave a fair value gap? It left a fair value gap here and one here. So this is essentially an order block, right? This is essentially an order block. Of course, you can go price pack and put the order block on here. You can choose the order blocks. Where is it? Where are you? Yeah, here. I think volumetric order blocks. It just scatters the chart for me, but you can if you put it on, you would see the exact same thing. So 50% of this order block is being bypassed. So this is going to be invalidated order block, and we know we want it to be invalidated. Why? Because we are bullish, so we want all the OBs or the FVGs of the bullish order blocks, sorry, of the bullish candles to be respected, and the ones of the bearish to be disrespected. So people are like, oh, this is an order block. Oh, there's an order block here. So once price comes back here, we should short. Why? Then you'd be like, oh, how did you know this one will work and this one won't work? We have a bullish order block, guys. So we have a bullish order flow right now. We're very bullish right now. So, and we just, once this price closes above this 50%, so where's the 50%? You can see in 45 seconds, it's gonna close. If it closes up, yeah, it's already bypassed it. So this is invalidated, guys. But like I said, guys, this high, which is our buy side, remember I noted it earlier. We want to see price take this one. In a bullish order flow, all the bullish ones will be respected, all the bearish one will be disrespected. So I don't care about this fair value gap. Some people will be like, oh, let's short here, there's a fair value gap here, or let's short here, there's a fair value gap here. You have to know the narrative or the context of what the price wants to do. So now if you go on the daily, let me show you guys something. Look at the daily. We have a Chosh, We broke market structure on the daily. This is the order block, another order block, FVGs. So now we're still bullish. Let's go back to the 5 minute. I wanted to show something on the daily. So as you can see on the daily candle, we're bullish. So I expect the price to close below the high. So manipulation, distribution, accumulation, manipulation, distribution, and the candle has to close somewhere below the high. Just how the market works. So we should close somewhere around here, very close to the high. You see, guys, look at these candles, just green, big candles. You could have caught this move. How big is this move? 200 ticks, guys. Zero drawdown. Zero drawdown. From this FVG, from this Josh, or from this order block, or from this propulsion block. As soon as it closes, you'd enter here. And you can put your stop loss. Where would you put your stop loss? Here, here, or here. I don't care. Because I'm taking a risky trade. What would I do? I'll take the high, the low, extend it over. I'll put my stop loss anywhere below the 50%. So I can put my stop loss literally a few ticks away, like half, like here. Like that. And I'll target these highs. I'll be content with it. That's 100 ticks. That's 4 RR.
Right, man. Well, come on. Come on.
Okay, guys. So the market's closing. I think it's not really filled my vision. Cousin Nicholas. All right, bro. So this was for today. I hope it was useful. It's very easy, guys. It's just it doesn't look it looks complicated, but if you just do it every day, you'd understand. Just know what to look for. And I just told you what to look for. Just look for this all the time. Even if you're in a trade, pay attention. So you're longing, where's your eyes? This fair value gap, this fair value gap, this fair value gap. Sorry, drawn for you by LUXALGO, so you don't have to look for them. And you want to see them get broken. We broke it here. So good. We broke this one here. Good. We broke this one here. Good. We're struggling here. At this. Fair value gap. Close exactly on it. But the market is essentially closed, so there's no volume anymore coming down. All right, guys. I think let's wrap it up for today. And if you guys like this, enjoy it. Text write on the chat so I can maybe do it again tomorrow and more. So see you later, guys. Bye.